Hi, let me teach you how you can place a trade in less than 3 minutes. You downloaded the app, you folded your account, but you're wondering what next. Come close. Let me teach you how you can place a trade in less than 3 minutes. Step 1. Log into your account and ensure your account is being funded. Step 2. Next, you use the search bar to find the stock you want to invest in. For example, you click on buy. We want to buy MTN from the market. MTN is selling for 800 naira currently. You could view the market, you could see the chart to know the particular price MTN was selling for at different dates and time. Then you click on MTN to buy. Step 3. Click on the stock to view the important information and the current price, market performance, and company details. Step 4. Once you decided to invest, click on the buy button. Step 5. Enter the amount of shares you want to buy. For example, we're buying 500 units of MTN shares at the market price. Then we proceed. Step 6. Always double check your order before proceeding or clicking on submit. And lastly, click submit and congratulations, your trade has been placed. And that's it. Investing doesn't have to be complicated. Start with what you can afford. Stay consistent and focus on your long-term financial goal. You're welcome. Hi, let me teach you how you can place a trade in less than 3 minutes. You downloaded the app, you folded your account, but you're wondering what next. Come close. Let me teach you how you can place a trade in less than 3 minutes. Step 1. Log into your account and ensure your account is being funded. Step 2. Next, you use the search bar to find the stock you want to invest in. For example, you click on buy. We want to buy MTN from the market. MTN is selling for 800 naira currently. You could view the market, you could see the chart to know the particular price MTN was selling for at different dates and time. Then you click on MTN to buy. Step 3. Click on the stock to view the important information and the current price, market performance, and company details. Step 4. Once you decided to invest, click on the buy button. Step 5. Enter the amount of shares you want to buy. For example, we're buying 500 units of MTN shares at the market price. Then we proceed. Step 6. Always double check your order before proceeding or clicking on submit. And lastly, click submit and congratulations, your trade has been placed. And that's it. Investing doesn't have to be complicated. Start with what you can afford. Stay consistent and focus on your long-term financial goal. You're welcome. Hi, let me teach you how you can place a trade in less than 3 minutes. You downloaded the app, you folded your account, but you're wondering what next. Come close. Let me teach you how you can place a trade in less than 3 minutes. Step 1. Log into your account and ensure your account is being funded. Step 2. Next, you use the search bar to find the stock you want to invest in. For example, you click on buy. We want to buy MTN from the market. MTN is selling for 800 naira currently. You could view the market, you could see the chart to know the particular price MTN was selling for at different dates and time. Then you click on MTN to buy. Step 3. Click on the stock to view the important information and the current price, market performance, and company details. Step 4. Once you decided to invest, click on the buy button. Step 5. Enter the amount of shares you want to buy. For example, we're buying 500 units of MTN shares at the market price. Then we proceed. Step 6. Always double check your order before proceeding or clicking on submit. And lastly, click submit and congratulations, your trade has been placed. And that's it. Investing doesn't have to be complicated. Start with what you can afford. Stay consistent and focus on your long-term financial goal. You're welcome.
Good morning to you, our esteemed listeners and investors. I want to welcome you to another week and another edition of our Monday morning breakfast session. I am Akinyemi Omotayo, and joining me this morning is Miss Emanuela Otunye. So, taking it to first of all, I think we wanted to note that Lead Capital is registered and regulated by the Securities and Exchange Commission of Nigeria. So looking at the money market and treasury bills activities for last week, money market rates remained broadly stable throughout the week, reflecting relatively balanced liquidity conditions within the system. The open repo rate held steady, while the overnight rate declined marginally by 3 basis points to close at 22% and 22.20% respectively. Despite the slight moderation in funding rates, system liquidity weakened compared to the previous week, largely due to the settlement obligations arising from the Nigerian Treasury bills auction. Nevertheless, liquidity levels remain sufficient to support market activities, preventing any significant upward pressure on short-term rates. At the last NTB primary market auction, the CBN offered 1 trillion worth of Treasury bills across 91 days, 182 days, and 3-4-day tenors. Investors' participation remained robust, with total subscription reaching approximately 1.86 trillion, translating to an oversubscription of 863.4 billion. This strong demand highlights the continued attractiveness of government securities as investors seek relatively safe and attractive investment opportunities amid prevailing market uncertainties. Following the auction, the CBN allotted a total of 1.49 trillion, significantly above the initial offer size. Despite the strong subscription levels, stock rates advanced across tenors, indicating investors' preference for higher yields in the current interest rates environment. Specifically, stock rates increased by 33 basis points, 36 basis points, and 119 basis points on the 91-day, 182-day, and 3-4-day instruments, respectively. The notable increase at the long end of the curve suggests investors' continued demand, adding yield compensation and further duration exposures, reflecting expectations that interest rates may remain elevated in the near term. Meanwhile, activity in the Treasury bill secondary market was predominantly bearish during the week. Trading sentiments was largely driven by sell-side pressures as market participants reacted to high stop rates recorded at the primary market auction. The auction outcome actively reset market pricing expectations, prompting investors to adjust portfolio positions and seek higher yields in the secondary market. Consequently, yields trended upwards across most maturities, with average Treasury bills yielding by 27 basis points week on week to settle at 17.78%. For the bond market, the FGN bond secondary market traded on a bearish note throughout the week as investor sentiment remained cautious amidst evolving macroeconomic developments. Market participants reacted to the latest data, which came in higher than expected, raising concerns about near-term interest rates outlook and possibility of prolonged tight monetary policy stance. Further weighing in on sentiments was the release of the June 2026 FGN bond auction circular, which revealed a substantial offer size of 1.2 trillion. The anticipated increase in bond supply prompted investors to adopt a wait-and-see approach, resulting in widespread selling pressures across the curve. Consequently, yields trended upwards across most maturities as market participants repriced fixed income instruments to reflect changing market dynamics. On a tenor basis, yields at the short end of the curve increased by an average of 11 basis points, while the midterm to the end recorded an average of 7 basis points. The relatively steeper rise in short end suggests heightened sensitivity in inflation expectations and monetary policy considerations. Trading activity during the week was concentrated in benchmark 2029, 2030, 2031, 2035, 2037, and 2053 maturities as investors sought out to rebalance portfolios, thus attracting bulk market activities across the curve. Overall, market closed weaker on a week-on-week basis, with the average benchmark yields advancing by 15 basis points to settle at 16.81%. For the foreign exchange market, the Naira witnessed a slight depreciation in value as we witnessed a negative 0.07 change in the official NAFEM window, closing the week at 1,363 Naira 82 kobo. And we also witnessed a 0.36% decline in the BDC parity market rates, closing at 1,395 Naira. What is the outlook for the week? Looking ahead, funding rates are expected to remain relatively stable in the near term, while markets will absorb settlement obligations arising from the FGN bond primary market auction. Anticipated inflows from maturing instruments are expected to provide adequate liquidity support. As a result, money market rates should remain largely range-bound, bearing any significant liquidity shocks. In the Treasury bill secondary market, trading activities is expected to remain largely driven by prevailing liquidity conditions and investors' demand for short-dated government securities. Market participants are likely continuing to seek attractive yield opportunities, with trading patterns expected to reflect the balance between system liquidity and evolving interest rates expectations. Meanwhile, in the FGN bond secondary market, it is expected to trade on a relatively subdued note, as investors adopt a conscious stance ahead of this week's primary market auction. Market participants are likely to focus on auctions offer size, demand levels, and stop rates for further direction. Consequently, trading volumes may remain light, with investors preferring to await the auction outcome before taking significant positions across the curve. With all that being said, believe current market conditions present attractive investment opportunities. A range of fixed income diversified investment solutions are well positioned to help you achieve your financial goals. From our lead fixed income fund, which is a low risk option prioritizing capital preservation and growth, to our lead balance fund, which provides a balanced investment approach diversifying across high quality stocks and fixed income instruments. It is worthy to note that our lead balance fund is #1 performing in the market now in terms of yield. And for our investors seeking a low risk profile, our fixed income return option consider our Gazelle portfolio, offering rates from 90 to 25 days with predictable growth. For our clients with significant volume of FX, our Eurobond trading platform allows investments in US dollar denominated debt instruments with biannual coupon payments requiring a minimum subscription of $200,000. However, clients with $100,000 to $150,000 could reach out to us, and I'm pretty sure we can find something to do with that. We also have our lead dollar fund, which offers a more accessible dollar investment option with a minimum subscription of $1,000 and a 180-day holding period, providing biannual dividend payments and an attractive annualized yield. With that brings us to the end of our fixed income report. Please permit me to hand you over to our in-house equities analyst, Ms. Emanuela Otonye, to give us insights on the happenings in the equity space and what to expect for this week. Ms. Otonye,
Okay, good morning, esteemed investors. Welcome to this week's equities market review meeting. We'll be taking you on the reviews of the equities market, financial metrics for the cement manufacturing and consumer goods, earnings update for the first quarter 2026, top investors delight stock for the week, weekly stock recommendations, weekly expectation, and the outlook for this week. So both the NGX ASI and NGX 30 index closed lower for the week ended 19 June, reflecting sustained profit taking and cautious investor sentiment. The market recorded declines throughout the trading week, with both indices maintaining a downward trajectory. Selling pressures intensified towards the later part of the week, resulting in sharper declines on Thursday and Friday. The NGX 30 index underperformed slightly, indicating profit taking in large cap stocks. Despite the pullback, the market remains above key long-term support levels, suggesting that the broader bullish trend is still intact. This simply means that investors should remain selective, focusing on fundamentally strong stocks while monitoring support levels for signs of market stabilization. Looking at the charts for the All-Share Index for the month of June, this market has delivered exceptionally year-to-date performance, advancing from approximately 155,000 points to above 250,000 points, driven by strong investor sentiment and corporate earnings. Following this rally, investors have begun taking profits, resulting in a short-term correction characterized by lower highs and lower lows. The recent decline has brought the market to a key support zone around 235,941 points, where buying interest has started to emerge. While short-term sentiment remains cautious, the broader market structure remains positive as the index continues to trade significantly above its opening level for the year. So we expect that a successful defense of the 235,941 point support level will trigger renewed buying interest and a potential market rebound. Investors should remain focused on fundamentally strong stocks and take advantage of valuation opportunities created by the current market pullback. For the chart analysis for the year-to-date index trend, The market recorded significant year-to-date data growth, advancing from approximately 155,000 to 250 points, reflecting strong investor confidence and sustained buying interest. After reaching new highs, the market experienced a moderate pullback as investors began to lock in profits. Despite the recent decline, the index remains well above its starting level for the year, confirming that the broader market trend remains positive. So the current pullback should be viewed as a consolidation phase rather than a reversal of the long-term uptrend. Investors should monitor key support levels while focusing on fundamentally sound stocks with attractive valuations. This slide shows us the distribution of quantity traded for the week. We can see that 57% of the traded volume for the week was on financial services. We see 6% on services, 4% consumer goods, and the rest on others. Now let's look at how this distribution took place for the week. It took total turnover of 3.08 billion shares worth 254.61 billion was traded, in contrast to a total of 4.96 billion shares valued at 207.52 billion that exchanged hands in the previous week. Financial services industry led the activity chart with 2.07 billion shares valued at 64.49 billion, with a contribution of 67.44% and 25.33% to the total equity volume and value respectively. Service industry followed with 175.74 million shares, worth 2.76 billion. Third place was the consumer goods industry with a turnover of 133.38 million shares, worth 12.68 billion naira. Trading in the top three equities, Access Holdings, Sterling Financial, and Jaiz Bank, accounted for 819.23 million shares, worth 12.25 billion naira, and contributed 26.64% and 4.81% to the total volume and value. Market capitalization depreciated by 3.59% to close at 151.33 trillion naira. The sectorial performances for the five major indices closed negative. NGX banking with week to date at a negative 10.49% and year to date at a positive 35.77%. Consumer goods week to date also closed negative by 1.61% and year to date at a positive of 18.14%. NGX Insurance week to date closed negative at 7.22% and also year to date negative at 1.75%. The NGX Industrial also closed negative week to date at 4.11% and year to date positive of 95.79%. NGX Oil and Gas closed negative week to date at 1.06% and positive year to date at 111.13%. Now we're going to look at the financial metrics for investment approach in the cement and the manufacturing and consumer goods. This analysis compares selected companies against their industry average using two key valuation metrics, that's the price to earning ratio and the price to book ratio. Stocks trading below averages may indicate undervaluation and present potential investment opportunities, while those trading above industry average may warrant caution. Dangote Cement appears attractively valued relative to the industry despite being the earnings leader, with an EPS forecast of 76.12 naira, significantly above the industry average of 40 naira 43 kobo. Its PE ratio of 14.06 times is slightly above the industry average of 15.05 times, suggesting investors are paying less for each naira of earning compared to its peers. is a price to book ratio of 6.3 times, is also well above the industry average of 9.26 times. This just means that the strongest earning profile in the sector and is trading at a discount for industry valuation. Now let's look at WAPCO. WAPCO forecast EPS stands at 24 naira 32 kobo, while its P ratio of 12.95 times is lower than both Dangote Cement and the industry average. Its price to book ratio of 6.41x is also significantly below the sector average. In summary, WAPCO is the cheapest stock on a PE basis amongst the major cement players. It appears undervalued relative to industry benchmarks. Although BOA remains a strong company fundamentally, its PE ratio of 18.14 times exceeds the industry average of 15.05 times. Similarly, its price to book ratio of 15.07 times is substantially higher than the sector average of 9.26 times. It appears the market has already priced in significant growth expectation. There's limited upside compared to its peers. We advise existing investors to maintain position, but fresh entry should be approached cautiously. We also look at the consumer sector, starting off with Cadbury. Cadbury appears significantly undervalued on earnings metrics. The PE ratio of 9.73 times is substantially below the industry average of 16.28 times. This suggests the stock may not yet fully reflect its earning potential. It has attractive valuation, potential opportunity, and sustainable for gradual accumulation. Nigerian Breweries, however, appears undervalued relative to its peers. The PE ratio of 10 times versus the industry average of 16.28 times. Although its price to book ratio is slightly above the industry average, the earnings valuations remain attractive. There's recovery potential after recent economic challenges and the attractive valuation relative to sector peers. NASCON, on the other hand, combines solid earnings with reasonable valuation. It currently trades at a PE ratio of 15 times, slightly below the industry average of 16.28 times. Its earnings outlook remains healthy, supporting a buy recommendation. NASCON holds a strong market position in the salt and seasoning segment, and the earnings growth remains resilient. It also has a balanced risk-reward profile. Unilever appears relative to its peers with a PE ratio of 28.64 times, is considerably above the industry average of 16.28 times, suggesting investors are paying a premium for expected future growth. For Unilever, much of the expected growth may already be reflected in the share price. The key takeaway from this analysis is that valuation matters. While quality companies are important, investors generate superior returns when they buy strong businesses at attractive prices based on current metrics and based on what we have seen today. We are advising that investors can still take positions in stocks like WAPCO, Dangote Cement, NASCON, Cadbury, and Nigerian Breweries, as they offer more compelling valuation opportunities than their sector peers. This is a list of the company's earnings updates for Q1 2026. This just shows us the profit after tax for the year 2025 and 2026 changes, EPS, and the industries. A copy of this report will be sent to your emails. Please do well to go through them. This is also the Investors Delight stocks for the week. In it, we have GT Bank, Nigerian Breweries, Dangote Cement, NASCON, Lafarge, MTN, CWG, and Cornerstone. For our lead weekly stock recommendations, from number 1 to 19 are buy recommendations, 20 to 25 are hold recommendations, and 26 to 32 are sell recommendations. Please do well to go through these when you get the email. So market expectation for this week. Last week, the Nigerian stock market ended in negative territory after 1 week of bullish sentiment. The bearish sentiment reflects the continuation of profit-taking activities by investors, as well as portfolio rebalancing by institutional investors ahead of half-year closure. This week, we expect the selling pressure to continue, but somewhat outweigh buying sentiments. Consequently, we expect a slightly bearish market for the week. We also predict that the NGX all-share index will likely close around 232,500 points and 245,500 points. We encourage all lead investors to download our general stock recommendations and our morning insights for weekly investment decisions. We expect the bear to dominate few of the trading days this week, leading to slight negative market closure. With this, we have come to the end of the equities report for the week. We can now take your questions. Please indicate by raise of hand, or you type the questions in the chat box. So, good morning. Can you provide guidance on how to buy the anticipated Dangote Refinery IPO stated for September 2026? Would there be a link or similar IPO? Okay. So, the IPO, we're expecting it to come to be open in September, and there will be an offer form, right? And we are also trying to integrate it into our app so that lead investors will be able to get the offer through our app. So just contact customer service or your investment advisor, your relationship manager, and you'll be pushed through the process. Okay, so what sector should lead the next rally? For now, we're looking at the banking sectors, cement and consumer goods, and also selected industrial stocks to remain strong candidates, especially those trading below their historical valuation. So, is the market still bullish? Yes, compared to the levels that we started this year, we'll say the market is still bullish. What we're just seeing now is the correction, profit taking. Is this the beginning of a market crash? At this stage, no. We are seeing a correction after the significant rally. It's just normal for the market to correct itself, and this require a breakdown of multiple support levels. So for a crash, for it to be called a crash, or for we to now say that the market is experiencing a crash, you will require multiple breakdown of support levels accompanied by widespread panic selling, and that is not what we're seeing now. So it is not a crash yet. Should investors be worried about the current decline? Not at all. I think this just creates new entry points for new entrants into the market. It also creates an entry point for people that will want to lower their average costs. So it's not something to be worried about. How can investors trade the market with the current sentiment? Again, let us focus on the companies that have strong valuation, fundamentally sound stocks. Follow the trend. Don't follow the trend. However, look at companies that are fundamentally sound and are below their valuation and take positions. What catalyst will push the market back to where it should be? Okay. Okay, so well, we're gradually rounding up the Q2 2026, which is also the half year. So we expect that once results starts to come in, it will trigger investors to come back to the market and also push the prices. Last week, Friday, we saw the results of Aradel. Right, a very fantastic result, and also dividend was declared. So we expect reaction to that result today in the market. You can drop your questions in the chat box or indicate by raise of hand, and you'll be unmuted. When are we expecting Q2 results to start trickling in? We're expecting it from July, mid-July to the end of July. We should see Q2 results for some of the companies. Like I said earlier, we should see Q2 results from mid-July to the end of July. Why is CWG recommended for a buy? From the analysis that we put out, we can see that it is currently trading below its intrinsic value. So that is why we put it as a buy. So you can take opportunity. If you already hold CWG, this is a time for you to average down and take positions on this stock.
Okay, with that, we've come to the end of this week's Monday morning breakfast session. We cannot appreciate you enough for joining us week on week. We'll see you same time, same place next week. Bye for now.